Okay, hi guys. So what we will be doing today is, as promised, I will do the tutorial for NPV. When I do the tutorial for NPV, what I also will do is that I will show you exactly scenarios that may differ in your question. That means I'm going to show you number one, tax is paid in the same year profit arises. Number two, working capital incremental. The asset replacement and also the constant one where the working capital does not increase, inflation, and also tax paid in areas, capital allowances. Okay, I think I just repeated it here. Anyways, before I start, so I hope that you will be able to look at the questions that I give you, okay, after I have also done the question with you. Besides that, I think another thing that's very important for you to do is also to ensure that you understand the concept of the question that I'm going to do with you. Because, guys, just to remind you, when we do a question like this, I'm going to teach you from start to end how you read the question, how you treat the question, how you do it in your exam paper as well. So I want to kindly remind you to have all your information, all your relevant resources ready for us to be able to use Excel. Besides Excel, I will try to use Excel in all. Okay, if at all I need a bit of explanation, then maybe you will see me writing somewhere. Okay, but other than that, I'm going to teach you exactly how we use the concept. And we apply it in the Excel. So I've got three questions for you. In the three questions that I have prepared for you, one of it is the normal working capital. Another one is incremental initial investment and also the scrap value. And then the last one is the one that does not change, all right? And also I have included a little bit more of a complicated one where I include the working capital, where the working capital is a percentage of sales, all right? Now, so let's start. Let me share my screen with you guys. Yes, here. Okay, so I'll read one question and I will do it, okay? And then after that, we will do other questions as well. Okay, guys, now let's start with the first question. Now I'm going to do two or three questions depending on the difficulty of the question. And at the same time, guys, I am also going to ensure that you are able to achieve a saturated point where you do not have to, okay, I repeat, you do not have to go back and do 10 million questions by yourself, because these three questions that I'm going to do with you will help you in terms of gaining sufficient knowledge in terms of NPV and also in terms of Excel. All right, now let's start. Okay, so let's start with Danko. Okay, the examiner asked us to, guys, maybe I should make it a little bit bigger, fill up the empty spaces that I have. Yeah, all right. Okay, so now, um, okay, so examiner asked us to calculate the net present value of the investment project in nominal terms and comment on the financial acceptability. So when he say comment, it's 1 mark, right? When he say nominal terms, that means it includes inflation. And when he asks you to calculate NPV, please remember your format, right? So the moment we read this question, you already know in your mind what is the format that you are going to use to do your NPV question. All right, now, Danco has undertaken market research costs at 200,000 in order to forecast the annual future cash flow of an investment project with the expected life of 4 years. So this is the useful life or the maturity period. Okay, now the next one would be you have sales revenue, and you have costs. Now, the forecast cash flows are before taking into account of general inflation of 4.7% per year. So guys, remember, when I say future cash flow, what I mean, sorry, when I said general inflation rate, this is the question that shows you general inflation rate. The capital cost of investment project payable at the start of the first year. Okay, so this is general inflation rate. So general inflation rate means all your costs and all your revenue will increase at the same percentage of 4.7%. All right. Now, the capital cost of the investment project payable at the start of first year would be 2 million. So this is my initial investment. So initial investment, it is payable at the start of the first year. The investment project will have a zero scrap value at the end of the fourth year. So guys, remember, your scrap value here equals to zero. Okay, scrap value equals to zero. The level of working capital investment, so he's talking about working capital now, at the start of each year is expected to be 10% of the sales revenue in that year. So if year one you calculated your sales revenue, your working capital will be 10% of your sales revenue, and it would be invested at the beginning of the year. Example, beginning of year one. So for presentation purposes, we need to show it at the end of year zero, because end of year zero equals to beginning of year one. Now, the next one, capital allowances would be available on the capital cost of the investment project on a 25% reducing balance basis. That means I need to calculate my reducing balance depreciation, and then that amount you have a tax allowable depreciation of 30%. Now, tax is being paid 1 year in arrears. Danco has a nominal after tax cost of capital of 12%. Okay, guys, just to remind you, is it possible for us to use before tax cost of capital? As long as your calculation includes tax, you need to take after tax cost of capital. If your calculation does not include tax, then you take before tax cost of capital. So just be aware of that. All right. Now, let's proceed to do this question together. Always remember, I told you, whenever you start doing a question, always remember to, number one, write the name of the company. So HDW. Okay, sorry, this is Danco. Sorry. Danco. Okay, after that, make sure you part A. So part A, remember I told you the first thing that you need to do is you need to do your format. So year, sales. Sorry, what cost do they have? They just have cost. Okay. So cost, and then after that you have operating cash flow. You have tax at 30%. Then after that you have initial investment, scrap value, tax saving on capital allowance, working capital, net cash flow, discount factor at 11%, PV and PV. Okay, now when you do a question like this, remember, leave a line here, a column here. You start with year 0, 1, 2, 3, 4, 5. Okay, now what you do is you start with your sales working. What is your sales revenue? Sales revenue in year one is 1250. It will increase with the annual inflation rate of 4.7%. So in year one, 1250 multiply 1.047 to the power of 1 Oops. Equals. I forgot the equal sign, guys. Okay. To the power of 1. And then year 2, 25, forgot the equal again. 2570 multiply 1.047 to the power of 2. And then 6890 multiply 1.047 to the power of 3. And year 4 is equals to 4530 multiply 1.047 to the power. Okay guys, I'm going to give you some time. All right, just give me a moment. Let me just familiarize everything. Okay, now to do the power of 1 2 3 4, you do this. Okay, okay, now if I want to do, okay, before that, let me just explain to you why is it that I take 2570 and then I multiply 1.047 to the power of 2. Why do I do that? Because the examiner has stated that the cash flow that he gave you in the forecast did not include inflation. So the 2570 is the revenue that you will earn for in year 2, okay, for year 2, but that has not included the inflation level yet. All right, so what I need you to do is I need you to include that inflation level into your calculation. Okay, what you do is you take 2750, you multiply by 1.047 to the power of 2. The reason is because the information that was given to you, okay, the information that was given to you is a year 0 information that did not include inflation at all. So your job is to include inflation in the calculation. Are you all okay? So that is why you do to the power of 2, to the power of 3, and to the power of 4. Now, when you do your cost, I just want to quickly remind you, please remember that when you do any cost element or any calculation that includes the cost element, I want you to please remember to put the negative. Example, equals to negative 500 multiply 1.047 to the power of 1. Okay, and then year 2 is 1000 multiply 1.047 to the power of 2. So don't forget the negative 1000, negative sign. 1000 multiply 1.047 to the power of 2. So you just proceed to do your calculation. Okay, just follow me. I'm doing it slowly on purpose. So guys, please remember when you attend my classes, you need to ensure that you are following me closely in class so that you will be able to keep up with my class. If not, then you will have to keep, pause, rewind, play. It's really a waste of time for you. Okay, I do it slowly just with the view of helping you guys to cope up with me together in class. All right, now the next one, negative 1750 multiply 1.047 to the power of to the power of 4. So this one, okay, why I asked you to make sure it's negative, because you can see that I'm going to do a trick here. Equals to SUM open bracket, you sum these two up, close bracket. So equals to SUM open bracket, you highlight year 4 and year 5, row 4 and row 5, you enter it will give you what is your operating cash flow. What you do from here is you copy and you paste it year 1 all the way to year 4. Now, once you have had a hang of this, once you have a hang of it, what I want you to do is I want you to calculate tax. Remember, I told you the tip when you have tax paid in arrears, what you do, you will go to year 1, you will straight away put it as 0 so that you don't make an error or a careless mistake. Okay, and then when you go to year 2, you straight away put equals to negative year 1 equals to negative year 1. Why I put negative is because there is a profit that you make in year 1, so the profit will attract a tax payment. So multiply 0.30. So remember to put the negative sign. Now you just copy this, okay? You paste it up to row 5. So guys, remember, you copy and you paste. When you copy and you paste, you can use Control C, Control V, right? Now, let's move on to the next part where you have to incorporate your initial investment. So the project costed, the investment in the project was 2,000, so negative 2,000. I am doing all my answers in thousands. Okay. Your scrap value of the project, he said 0, so I'm going to put 0. Now, tax saving on capital allowance will be working number 1, and your working capital will be working number 2. So let's go and see how we do working number 1 using the format that I have taught you. Okay, so number 1, tax saving on capital allowance. So year, cash flow, at 30%, and timing. Now, year 0, the cash flow is 2,000. Okay, guys, I'm going to show you a trick here. Year 1, you need to pay reducing balance at 25%. So, equals to negative 2,000 multiplied by 0.25. Why? Because it's a reducing balance basis. So, equals to negative 2,000 multiplied by 0.25. You must put the negative because you want to show it as a negative figure. Alright, so you must put the negative sign there. Now, once you do that, you put equals to SUM open bracket. You highlight these two close bracket. Alright, now I'm going to teach you a trick, guys. Okay, now you are selling the project or the investment in year 4, right? That means what I want you to do is you copy the negative 500 and the 1,500. They're here. I've highlighted it for you. You copy this, you paste it for year 2 and also for year 3. But please don't exceed it. The reason why I say don't exceed is because then it will lead to careless mistake or error. Okay. Now, what you need to do is, I just want you to put here year 2, here year 3. Okay. Now, in the final year, before you calculate the final year value, you put year 4, you put scrap value. Here is 0. Your year 4, you just sum up the net book value of year 3 and year 0. Guys, I want you to put the year 0. It won't take you more than 1 second to do it, and it will reduce the risk of error. Okay, if you feel like you are comfortable already, you don't need to do this. You straight away write year 4 here. Okay, now your tax is a tax benefit. So when your tax is a tax benefit, what I want you to do is Here you put equals to negative 500 multiply 0.3. Okay, why you need to put negative? Because you want to zeroize, or you want to make it into a positive value. Okay, you want to change it into a positive value, so you will put the negative sign. You copy and you paste it. Now for the final year, guys, remember I told you no need to put the negative. You do not have to put the negative because it's a tax under claim, and you can claim more tax. And when you can claim more tax, you put multiply by 0.3. Now your tax starts in year 2. Oh, sorry. 2, 3, 4, and 5. All right. So if you go up here, please remember whenever there is a tax item related, you put 0. Then you equals to this amount. Use tab equals to, you scroll down year 2. You use tab. Tab will help you move sideways. Equals to, scroll down 3, and equals to this. You enter. Now, so the next one, working to, is working capital. Okay, guys, I just want to remind you something. This working capital is a percentage of the sales. That means it is 10% of the revenue. So, number 2, working capital, year, working capital requirement, incremental working capital. So year 0, 1, 2, 3, 4. Okay. Now guys, remember I told you when you are doing your working capital adjustment, what you need to do is, if you need the investment, if you need to sell the assets in year 1, you invest it in year 0. Correct? So here what you do is, year 0 equals to my sales value. So for year 0, please make it negative because working capital is a negative item, equals to negative year 1 sales multiply 10%. Okay. Now I repeat, you to find year 0 working capital, because year 0 working capital is an amount that you have to invest before you sell it in year 1, what you do is you will have to invest it in year 0. Okay, you will have to sell it in year 0. So how do you do it, or what do you do? You will take your sales from year 1, multiply by 10%, and that will be the investment that you need in year 0. Okay, guys. Number 2, please remember to make it a negative sign, because a negative means an investment in working capital. So equals to, enter. Okay. Now the same thing here, equals to negative multiply 0.1. So you just keep doing the same thing. Equals to negative year 3 multiply 0.1, and equals to negative year 4 negative year 4 multiply 0.1. Now guys, I want you to see that the investment in working capital is increasing in year 1, year 2, from year 0 to year 1, from year 1 to year 2. But from year 2 to year 3, it is decreasing. So what do you need to do, or how do you do it? Equals to this. Now, how much is your incremental working capital? It is, you take 281 minus 130. This is your incremental working capital. You copy, you paste it. Okay, you will notice, guys, please make sure everything is formularized, because if it's formularized, you are saving a whole lot of time calculating one by one. You can just copy and paste. Now you can see that from year 2 to year 3, since there is a reduction, your working capital is positive. So guys, remember I told you when I was teaching you working capital, if there is a reduction in your working capital, that means you have spent lesser amount of money in terms of working capital. Hence, you will require, or you will get a lower a tax saving, not tax saving, sorry, a working capital saving, because you invested lesser amount of money. Now, in the end of the year, remember I told you, recoup, that means it's a positive value. You just copy and paste year 3 value, but make sure you make it positive, so equals to negative year 3 value. Now, to check your answer, whether it is correct, you need to sum everything up. It has to be 0. If it is not 0, that means your answer is wrong. Okay, guys, are you all clear? So far, so good. Now, let's proceed. Okay, I need to fill up my values. Please remember, working capital starts from year 0. So, equals to the incremental working capital, tab, equals to year 1 incremental working capital, tab, equals to year 2, tab, equals to year 3, and finally year 4. Okay, so guys, after that you need to find your net cash flow. Please be careful, don't sum up the whole thing. You only sum from operating cash flow onwards. Why from operating cash flow? Because if you put all together, you are double counting. You already calculated the net operating cash flow. So to calculate net cash flow, you just take from operating cash flow onwards, copy, you paste it sideways. Your discount factor is 11%. So guys, I want you to listen to me closely, right? I want you to listen to me closely, very carefully. How do you do the discount factor in the simplest manner ever, and you can get your answer 100% correct? Equals to, see, your discount factor is 11%, right? 1.11 to the power of negative, you scroll up, you click the year, you enter. Now you copy and you paste sideways. You will realize that this is exactly the answer from the examiner's formula sheet. Now I want to remind you, if it is shown in 2 decimal place like this, do not bother to make it 3 decimal place. Do not waste time. Your examiner did not say that a decimal place will affect your answer. No. Leave it at 2 decimal place. Leave it there. Let be. Right? Now, what you do is also do not waste time in trying to copy and paste from the formula sheet. It's a waste of time. If you use my formula, guys, you make your life so much easy, because it's such a simple formula. 1.11 to the power of negative year. So easy, so straightforward. Enter. Now to calculate PV, equals to net cash flow multiplied by discount factor. You copy, you paste it sideways, and you calculate your NPV, equals to SUM sum. You sum sideways all your present value of cash flow, you enter. This will be your net present value. So guys, if your net present value is positive, that means benefit exceeds cost. If your net present value is negative, that means cost exceeds benefit. So if benefit exceeds cost, you accept. If cost exceeds benefit, you reject. Okay, so just write the project should be accepted as the NPV is positive, hence financially viable. Okay, so what you get the 1 mark is here. When you say you accept, you get 1 mark. Your examiner will give you 1 mark. All right, so I just want to make it smaller. Okay, I'm going to show you how it looks like, guys. Remember I told you in year 5 you only have the cash related tax related items, nothing else. Please make sure there isn't anything else in year 5. If not, your answer is confirmed wrong. Make sure consistency is there. So let's say here I show all my calculation in thousands. Everything here has to be in thousands as well. You don't have to bother wasting your time underlining like this. Examiners say do not waste time. I am saying do not waste time. As long as your working is clear and straightforward, examiner will be able to see it without any problem. So please guys, don't waste your time. Don't make your life difficult by trying to underline. I do it in class for class purpose because I want you to be able to see the difference, but at the same time do not waste time if it's not necessary. So you can see my working here is very neat, very nice. Examiner will find it very simple to read. He will love my working. Okay, so now let's move to the next question. The next question that I'm going to do will be let me share screen with you. Oh, we have another part of this question, part B. Okay, let's do part B before we move to the next question, because this is quite an interesting question. The examiner asked you to calculate the net present value of the investment project in real terms and comment on the financial acceptability. So guys, when examiners say in real terms, what you need to do is no inflation. This gives you 1 mark. NPV, you know what to do lah. Okay, so let's proceed with the calculation of NPV in real terms for Danco. Okay. Okay, so to start with the real terms, okay, I'm going to ask you to start a new sheet. Okay, in this new sheet, what I want you to do is, okay, Danco. Okay, now we need to calculate the real terms. Okay. Okay. Now, what I do is, guys, I'm going to show you, because you already done all these workings here, what you can do is you can just copy and paste the format here. Okay, I just want to remind you, when you do this, please remember something. Okay, please remember to delete this information. Okay. This information. All right, now what you do is you go back to the question, you just copy paste the information, because what he gave you is already the real cash flow, which does not include inflation. So equals to 1250 25750 2570 6890 4530. Okay. Now the cost negative 500. Please don't forget the negative. I keep telling you guys. Negative 2500 and negative 1750. Okay. Now initial investment scrap value is 0. Guys, what I want you to do is the capital allowance, you can just copy and you can paste it in here as well. Okay. Same goes to the working capital. Oh, sorry guys. Your copy paste function in your Excel in ACCA may not have copy paste value function. If they do not have copy paste value function, what you do is you just equals to above, because when you do it in your ACCA examination, you will do it in a separate answer sheet. So when you want to copy paste, it's a bit difficult, so you can just rewrite the answer. Of course, it will take a bit of time, but it's better than recalculating the whole thing. Okay. Now, everything else is pre-populated. You have your working here. Okay, you have your working here. You got your NPV. Okay guys, what I want to remind you is that whenever you do a question like this, when you copy and paste, make sure the values that you copy and paste, you copy and paste it correctly, because if you don't copy and paste it correctly, there will be a risk of error. What do I mean by risk of error? That means the timing. Let's say supposed to be copied and paste in year 0, you copy and paste it in year 1. Those are the kind of things, timing error, that leads you to losing your marks unnecessarily. Okay. Now, once you have done this, you see your NPV is still positive. So you can again copy and paste the comment down there. So there is something here that you still haven't changed, which is your discount factor. Okay. Sorry, you shouldn't copy the comment first, okay, because you need to change your discount factor. Now, this will be working number 3. Okay, guys, remember I told you when you need to calculate your real working capital. So working remember we use the Fisher formula. Okay, I'm going to make it a bit bigger for you. Okay, we use the Fisher formula. How you use the Fisher formula equals to 1 plus real discount factor. Okay, I'm going to show you the formula first. 1 plus real discount factor into 1 plus I equals to, 1 plus H, general inflation rate, equals to 1 plus nominal discount factor, or the examiner uses I. Okay, I normally tell my students use it as 1 plus R, 1 plus H equals to 1 plus M. Because R means real, M means money or nominal. It's easier for you because you already know those finance terms. Now, to calculate the value of R, it will be equals to 1.11 divided by 1.047, because you need to calculate 1 plus R equals to 1 plus M over 1 plus H R equals to 1 plus M over 1 plus H minus 1. Okay, now this minus 1 is equals to 1.06. So for the purpose of your examination, you can round it down to 6%, or you can use the total 6.02. Examiner will not penalize you for that. In fact, examiner will be more impressed if you can use 6.02. So here equals to, since you already calculated 1.061 to the power of negative, or maybe I just put 1.062 to the power of negative 0. Then you copy and you paste it. Guys, I just want you to remember, please change this, because here it is still shown as 11%. Change it to 6.02%. Do not forget to do that. Okay. Now everything else is formularized. Should not be any problem, should not be any issue. Just going to give you a moment there. Um, in case you need a moment, okay? Okay, your NPV. Okay, make sure you double check everything in case you make a careless mistake. So this one is in real terms. This is in real terms. Your tax 1 year in arrears. This tax saving on capital allowances. Okay. Now, guys, there is an error here. Why? Because we forgot to use the real discount factor, the real revenue. Okay, sorry for that. Number 2, working capital is very easy. Okay, you just do year. Okay, sorry for that error. Okay, working capital requirement and incremental working capital. So year 0, 1, 2, 3, 4. Okay, your working capital requirement, please do the same method, equals to negative 1250 multiply 0.1 equals to negative year 2 sales multiply 0.1 equals to negative year 3 sales multiply 0.1 and equals to negative sales multiply 0.1. So this is actually very straightforward. I think you guys may have caught that error, right? So equals to this equals to this minus this. Then you just copy and paste it downwards and change it. Check your answer, okay? It has to be equals to 0. So I'm just going to show you this formula. How do you calculate your working capital in year 2? You take year 1 minus year 0 to get the difference, and then you copy year 1 all the way to year 3. He will just auto populate for you, and then you calculate year 4. The total should be equal to 0, right? Now, so to populate it here, okay, so I think you guys would have caught the error already. Okay, 10 equals to, so please remember, double check your answers. So I just wanted to show you that also. it's very important to double check all your answers so that you will be able to know where you made the error. Like me, if I did not double check just now, I probably would have gone with the answer that is given to me. Okay, so just be a bit more careful, just be a bit more aware of what you are doing. All right. Okay, so if no other things for you to do, so you can conclude from here that the project NPV is still positive. Okay, the project NPV is still positive, so you can accept the project. So you just copy and you just paste the answer here. Okay, guys, I'm going to erase all these because it looks a little bit messy. And I'm going to show you the bird's eye view of this. Please remember to check all your discount factors, your tax rate, make sure you're using the right rate, because sometimes when you keep doing many questions, you may accidentally use the wrong rate, and that will lead to you getting a wrong answer. Okay, so it's very important for you to use all the appropriate and correct rates for your answer. Okay, now let's move on to our next question. The next question that we will be doing is in your what you call that, in your compilation will be HDW code. So what is the difference between HDW and the question that we did before? Number one, okay, wait, let me just share my screen. Number one, HDW uses specific inflation rate. And number two, there is a scrap value for this question. Number three, the most important difference that allows me to teach you something new is the asset replacement. So when the asset would be replaced, your working capital will not be recouped. You will continue to increase it. Okay, he give you general inflation rate as well. Profit you see in this question, it's 20%. Is in areas you have inflation, you have capital allowances, you have a working capital. Everything is in this question. All right, so let's start with this question. Let me share my screen. Oh, sorry, we have to read the question first. So let's go and read the requirement. All right. So HDW is a listed company, okay, which plans to meet increased demand for its products by buying machinery costing 5 million. So guys, for HDW, the cost of the machinery is $5 million. The machinery would last for 4 years, at the end of which it would be replaced. So remember, I was telling you that in terms of working capital, the machine replacement or asset replacement would carry a huge impact in how you answer the question. The scrap value of the machine, so he's talking about scrap value here, is expected to be 5% of the initial cost, which is, okay, so 5% multiplied by 5% multiplied by 5 million, this is about, if I'm not mistaken, 250,000, right? Capital allowances would be available on the cost of the machinery on a 25% reducing balance basis, with a balancing allowance or balancing charge claim in the final year of operation. This investment will increase production capacity by 9,000 units per year, and all of these units are expected to be sold. So guys, from this question, when he said that the production capacity is 9,000 units, what it means is that the company will produce 9,000 units and it will be able to sell all 9,000 units that they have produced. Now, relevant financial information in current price terms is as follows. So, year zero, current price terms, that means all information that is given to you are in terms of current year information. Now, selling price in the current year is $650 per unit. The inflation is 4%. Variable cost $250 per unit. The inflation is 5.5%. Incremental fixed cost is 250,000 per year and the inflation is 5% per year. So he has given you in this question, this is a specific inflation. Compared to what you did previously, which is general inflation. So if you look at the question before this, Danco, it was general inflation of 4.7%. Here in this question, it's a specific inflation rate. Now, in addition to the initial cost of the machinery, initial investment in working capital is, initial investment in working capital is $500,000. It will be required. Now, investment in working capital would be subject to the general inflation rate, which is expected to be 4.7% per year. So guys, I just want you to remember, whenever the examiner gives us a general inflation rate, remember I told you, you check your discount factor. If your discount factor is nominal, no issue. But if your discount factor is a real discount factor, then you must use the Fisher formula for you to calculate what is the nominal discount factor. All right. So here, when you check straight away, check here, it is already nominal. Now, this is your general inflation rate. Your tax, I think I've told you about this, okay? 20% 1 year in arrears, okay? And your money discount factor is 12%. So no issue here. He gave you nominal discount factor, so no issue noted at all. Now, let's proceed with doing this question. So guys, we will do it as usual in Excel. I will do it in a slow environment, slow pace, so that you can follow me and you will be able to understand very clearly. Guys, I am purposely doing this question because this question is slightly different from what we actually, there is a lot of difference compared to Danco previously. Danco. Now, let me share my screen. Hold on. Okay, so this question is HDW code. Now, in terms of HDW, part A is to calculate your NPV. Now, your NPV would be, okay, year, sales, cost. Okay, sorry, we had variable cost, we had fixed cost. Guys, remember, I always use this method. Have you ever seen me use a different methodology? I have never used a different methodology before. This is the only way that I use to calculate my NPV. I do not use a different method. Why I use or why I make it consistent is because when you have a consistent approach of answering the question, that is where you can see that actually the question is not a difficult question. It's just if you don't make it consistent, you actually make it a lot messy. And when it's messy, every question looks different. Are you all okay? Now, so in terms of year, remember always leave a column. Start from year 0 in the next column. Okay, how many years is this project? Okay, hold on, let me see. The useful life of it is 4 years. Now, Tax is paid 1 year in arrears, so we will 5. Okay. Now, for your sales, right? So selling price per unit is $650 with a 4% inflation, and the number of units is 9,000. So be careful. Equals to 650. Multiply 1.04 to the power of 1. Okay. Multiply by 9,000 units. Okay. Okay. Okay, guys, if you want to show it in thousands, you remove the 9 from the thousand. So, sorry, from the 3 zeros from the 9. So I'm going to show it in thousands because it looks less messy, okay? And remember, presentation is key when it comes to your examiner. Your examiner has said that some people give him a presentation so ugly that it's so frustrating to answer the question, to check the answers, and he felt like the students is losing mark because he couldn't find the answer, not because he doesn't want to give you. He cannot find your answer because it's so messy and complicated. All right, so now let's move on to the next one, which is your variable cost. So how do you calculate variable cost? Variable cost equals to $250. Your variable cost inflation is 5.5% per year. So 1.055 to the power of 1 multiplied by the number of units is the same. Guys, always remember, don't forget the negative sign. If you forget the negative, it's a careless mistake. Now, if let's say you forgot the negative sign, it's okay, because you can just equals to sales minus variable cost. But I always tell my students to use the sum function. That's why I always ask you to put negative. But if your lecturer teaches you using A minus B, that's fine. That's no issue. It's not wrong. It's 100% correct. Okay, it's just different lecturers use different methodology. You choose what suits you the best. All right, now the next one, incremental cost. Okay, so incremental cost is $250,000 per year. The inflation for variable cost, sorry, fixed cost is 5%. Okay, let me just double check. 255%, right? So enter, copy, paste. Guys, by now we have done 3 questions already. 3 NPV formats. Actually, it's 4. You should already know how to use the copy and paste function well enough. The reason why I am bringing this up is because I want you to understand that the copy and paste function is there to make your life a whole lot easy. So make sure you learn it. Learning it is not a problem. Make sure you know how to apply it in the exam as well. It's very, very important. All right, now. So now you can use sum equals to SUM, open bracket. You highlight 1, 2, 3, close bracket, copy and paste it. So I'm going to leave it here for a few seconds so that you are able to copy my answer. Guys, remember, I don't know, I keep telling this like a million, trillion, gazillion times already. Follow me in class. Do it together with me. It won't help you if you just lie down, use your phone, and then you just watch it. It's not going to help you. What is going to help you is when you repeat what I do. Not only when you repeat what I do, when you start to copy me, and you know when you know that you are a pro already, when you can do it faster than me. Definitely you are a pro already. But in order for you to be able to become a pro, in order for you to be able to do that, you first need practice, okay? Now remember, your tax is paid in arrears. So if tax is paid in arrears, what do you do? Remember, the first thing that you do is you put the values in years 1 as 0 because you are paying the year 1 tax in year 2. So this is equals to negative operating cash flow multiply 0.2. So this question tax rate is 20%. Please don't shock sendiri, put your own figure. Okay, I'm telling you, don't put your own figure. You put your own figure, the answer is wrong. All right, now copy pays all the way up to year 5. Okay. What is the initial investment? The initial investment for this question is $5 million. So negative, I'm going to do it in thousands. My scrap value, guys, remember in year 4, don't accidentally put it in year 5. You are making a careless mistake. Equals to 5,000 multiply 0.05. Now, tax saving on capital allowance, always do working 1. For your working capital, always do working number 2 as well. So let's go down and do your working. So I'm going to leave a few lines. Why I am leaving a few lines is for you to comment, you accept, you reject, and all that, right? So workings, number 1, tax saving on capital allowances, year, cash flow, tax at 30%, timing. Year 0, your cash flow is 5,000. Year 1, 25% is equals to negative this multiply 0.25. And then you equals to sum these fellows up. Okay. Something's not right. Why is it not right? Why is it SUM open bracket? Okay. Now guys, remember I told you a trick. What is my trick? My shortcut that I gave you, that I taught you. You copy the negative and the net book value. You paste it year 2, year 3. So this is year 2, year 3. And then you have a scrap value. Your scrap value, just now you calculated it as $250. Let me double check. Yes. And then you total up your net book value from year 3 with your scrap value. So this is your year 4 figure, which is also your balancing allowance. Now, your tax equals to negative. Please don't forget this. You must equals to negative year 1. The reason why equals to negative year 1 is because tax is a benefit. You want to get it as a positive value, not negative anymore. Enter, copy, paste, paste. And finally, in year 4, you do it in the final column. So guys, please remember, I've taught you how you do it in a more simplistic manner, how you do it in a way where you reduce your error. You want to reduce risk of error. Risk of error is very bad in your examination. So those are the kind of things that you want to minimize, you want to reduce, you want to avoid completely. Okay, so timing. So if it's supposed to be paid in year 1, you will pay it 1 year in arrears. So in year 2, year 3, year 4, year 5. Okay, now let's transfer all these values at the top here. So remember, wherever tax is concerned, in year 1, you put it as 0. So this is equals to equals to, okay. Now in terms of working capital, so guys, remember the only things that would be in your last column here would only be tax items. Like I said, if there is anything else there, please double check your working. There shouldn't be anything else there. Now let's do the working capital. Okay, the working capital, according to the examiner in this question, is that he said working capital will increase with the general inflation rate. General inflation rate is 4.7%. So your investment in working capital in year 0 is 500,000. Okay, let me just go down here. Working number 2, working capital. So you have year, working capital requirement, incremental working capital. In year 0, your working capital requirement is 500,000. Okay, then what you need to do is you need to calculate your working capital for year 1, 2, 3, and 4. So 1, 2, 3, 4. Remember, whenever you want to increase, you equals to the top value multiply 1.047. So here you copy and you paste it up to year 3. And then year 4 you don't have any value. Okay. Now equals to this. Remember what I told you regarding this? And then copy, paste. Equals to negative the final year. So please be a bit careful when you do it. Remember how to double check. Equals to sum, equals to, highlight the whole thing. If it's equals to 0, then no issue. That means your working is correct. Right, guys? So I hope that by now you already have a general understanding on how to do it, because the understanding of the key concepts, I've already spoke to you about it. Now it's just about the understanding of the whole NPV, how it comes together. Okay, remember I taught you how to use the tab function. Guys, whatever functionality I'm teaching you in class, that is something that will help you in your examination. So please don't think I'm just one old lady here talking to myself, unnecessarily. I'm actually here trying to help you to do it in the most simplest way possible. So please pay attention, listen to me. I've been experienced in teaching this for a very long time now. Okay, I may not seem like that, but actually I've been teaching F9 for a very long time, right? And really you can use my experience to your advantage to pass the paper, right? So now when we want to do the net cash flow, remember our net cash flow is from year operating cash flow all the way up to working capital. Okay, copy, paste. Make sure you find the total amounts here. Copy and paste. Remember, the final figure will only, the final year, the final column will only consist of taxation items, sorry. And then your DCF, guys, by now you already should know how to do this. To the power of negative 0 here. Enter. Copy, paste. Equals to this, multiply this. Copy, paste it. And SUM, open bracket, all the way. Okay, so guys, is it something that is difficult for you to do? I don't think so. I think it's fine, it's easy, it's simple, it's straightforward. It's just a matter of practice. If you are able to have enough practice, I don't think that it will give rise to any problem for you. Okay, I just want you to be aware whenever you do questions regarding NPV, please pay attention to careless mistake. Because so far that I've taught you, I keep mentioning to you, don't make yourself succumb to careless mistake. I think that's very important because careless mistake is a mistake that will bring you down for no reason whatsoever. So just be a bit more careful, okay, with careless mistake. If at all you have a problem, you can always revisit the videos that I've done. All my explanations are all the easiest manner to understand it and the easiest manner to deal with the questions. So now here you can see that your NPV is a positive value. So because your NPV is positive, what you do is you need to comment. So the project is accepted as the NPV is positive, hence financially viable. Okay. Remember, life is easy. You guys add complication to it. Same like ACCA. ACCA is easy to pass. You guys go and complicate everything and you create it, make it more difficult for you to pass the paper. Actually, it's very easy to pass. You want to score? Yes, it's a little bit more difficult to score, but to pass the paper, it is not difficult. It's something that you can do easily. Okay. If you guys are okay here, I would like to do one more question. Remember, I am a believer that the more you practice questions, the easier the question will become. So you will reach a point where, in terms of learning curve effect, right, you will reach the steady state after doing a certain number of questions in a certain number of times. So just please be more aware of it. I want you to be able to understand the concept very, very clearly. And once you do it, it will be a walk in the park for you. Okay. Now, so the next question that I want to do would be Warden Co. Okay. So what I wanted, guys, okay, there is something that I was supposed to do differently in this question. What is it that was supposed to be different? Was, okay, you can see that this is the normal way we did working capital. Okay, you can see that me as a lecturer, even though I've done it so many times, there is a possibility where I overlook something. So remember, this question was an asset replacement. That means asset was being replaced. Because asset was being replaced, what did I tell you? Do you have any working capital recoup? No. So please, you see, even me, after teaching for so many years, I make this mistake. So whenever you are doing it, please write this first, asset replacement, because if not, you surely will make the mistake. What I want you to do is, whenever there is asset replacement, um there should not be any working capital recouped. Okay, now so here you just copy and oopsie daisy, you just paste it here. Okay, here copy and paste. What I mean is, you will continue to incur incremental working capital. Incremental working capital. Okay, continue to incur incremental working capital. No recoup. Okay, the reason why there isn't any recoup is because, guys, you must remember, when the asset is being replaced, that means the project hasn't come to an end yet. That means once you sell this asset, you will buy another asset to continue with the project. So when will you have the scenario where your project working capital will be recouped? It will be only when your project comes to an end. So this one haven't yet. We are just assessing the project for a period of 4 years. So here I think they have changed. You see, this is a good thing about formularization. All right. What is important is once you have formularized everything, it will just work like magic. Okay, so no impact to the answer, but that was just one error that I made. Okay, please remember that whenever you do questions like this, you must be in a very, very sound mind. Whenever you do a question like this, you make sure you write whatever information that you need in your paper, because if you don't do so, it will lead to errors like this. Unnecessary, you're wasting 1 mark for no reason, guys. It's just a waste of 1 mark, and 1 mark is the difference between 49 and 50. And me as a lecturer, if I make this mistake after teaching for so long, you guys can make this error as well. Okay, but you must remember, I know I'm making the error, but you may not know you are making the error. Okay, because mine is just overlook in terms of reading the question. All right, so let me continue. Mm, with the next question that I think is very important, Warden Co. Okay, Warden Co is also a slightly different question from what you have been doing previously. Yeah. Calculate the net present value of investing in the new machine and advise whether the investment is financially acceptable. So here, what you need to do is you need to tell them whether you accept or reject. That will give you 1 mark. Net present value, you know how to do it. Okay, now let's read the scenario together. Warden Co. plans to buy a new machine. The cost of the machine payable immediately is 800,000 and the machine has an expected life of 5 years. Additional investment in working capital of 90,000 would be required at the start of the first year of the operations. So, start of first year also equals to end of year 0. Right? Now, at the end of 5 years, the machine would be sold for scrap. The scrap value is 5% of the initial purchase cost. Means 800,000 multiply 5%, 400,000. Okay? The machine will not be replaced. Okay? So if you never say the machine is replaced, that means you will continue. Okay? Now, here, production and sales for the new machine is expected to be 100,000 per year. Each unit can be sold at $16 per unit, and they will incur a variable cost of $11 per unit. Incremental fixed costs arising from the operation of the machine would be 160,000 per year. Now, Warden Co. has an after-tax cost of capital of 11%, which it uses as a discount rate in investment appraisal. The company pays profit tax 1 year in arrears at 30%, okay, of the annual tax rate. Capital allowance and inflation should be ignored. Okay, now how do you do this? How do you go ahead with the answer? Guys, the only difference between this question and the other questions is here, in this particular question, there is no inflation. So when there is no inflation, there is no increase in the value of your money over time. All right, now, and then he ignored capital allowance and also He asks you to specifically ignore inflation. Now, let's do Warden Co. Okay. Warden Co. Year. Oops. This is part A. Ayah, can't seem to find the. Okay. NPV. Okay. So you have year, sales, variable cost. Okay. In this question, does he have fixed costs? Yes, he has fixed costs. Operating cash flow. Tax at 25, 30%. Okay. 30% operating cash flow, tax, initial investments, scrap value, no capital allowances, and working capital. Net cash flow, PV, or discount factor first. How much is my discount factor, guys? 11%. PV and PV. Okay. So year 0, year 1, 2, 3, 4, 5, 6. Because the project life is 5 years and tax is in arrears, so 1 year later. Okay. Now, your selling price is 1,000. Excuse me. Excuse me. Your selling price is 1,100 units, okay? And then your selling price per unit is $16. So you copy, you paste it all the way until year 5. Okay. Year 0. Okay. Now, your variable cost is $11. So 11 multiply 100. Your fixed cost is equals to $160,000 per year. Okay, so please remember to put the negative, copy, paste. Now, operating cash flow, you total up everything, copy and paste. Your tax, because it's in arrears, in year 1 you put 0. Here you just put negative. Okay, copy and paste. Initial investment, your initial investment is 800,000. Scrap value is 5% of 800,000, so equals to 800 multiplied 0.05. Working capital is negative 90 in year 1 and you recoup 90. Why it's negative 90 in year 1 and then you can just recoup is because you do not have any increase in your working capital. No inflation rate, no increase, nothing. So you just recoup. So guys, remember I told you this question is actually a fairly simple, straightforward question. It's not difficult at all. So equals to 1.11 to the power of negative 0. Copy paste. Guys, by now you should be pro already. Copy paste and your NPV. You sum all sideways. Positive 104. Okay, when you do this question, what I want you to do is you need to comment whether you accept or whether you reject. So here the project is accepted as it is financially as the NPV is positive, hence financially viable. Okay. So far so good, right? So with this, I end the tutorial session doing 3 questions, all 3 of a different nature. I want you to be able to do it by yourself. Please follow me closely, because if not, you're going to be lost. We will do more NPV questions later, because from chapter 7, 8, 9, 10, 11 until 11 are all NPV type questions. Okay, so we will do more of them, okay, moving forward. But for now, I hope you guys are okay. In the next video, I'm going to talk about risk and uncertainty. So watch the next video for risk and uncertainty related video. All right.